way I would say is that this is very, very, very short term. We have not been able to communicate very clearly or in an articulate manner the merits of the merger because of the fact that we all have our results. So our results are in another 8 days, 9 days time, and with results in 9 days time, there is that much you can talk and a lot that you cannot sort of speak about. So we've not been able to communicate as much as we would have liked to. You must also remember that the day the merger was announced, the stock price shot up.
Yes.
And then it shot up and shot up dramatically. I think it almost hit the circuit,
10%,
if I recall right.
Yeah.
And then it sort of came down. So you're comparing today with the peak, that may not be correct. You have to compare it with what it was before the merger was announced. Now, what was the reason for the merger? The reason for the merger is that the merits, the strength of the combined balance sheet is going to be so huge. It's going to be a massive benefit to the economy, but more importantly, let's understand how it benefits the shareholders and the stakeholders in both the companies. So, first of all, HDFC as a housing finance company obviously has a higher cost of funds than banks. When we move into a banking structure, the total cost of funds of HDFC itself will come down, which means money will be available at a lower rate, at a cheaper rate, to fund the mortgage business, number one. Number two, HDFC will have the benefit of the distribution in the entire 6,500 odd branches of HDFC Bank. Today, all the branches of HDFC Bank do not distribute or do not source housing loans for us. Because we want a bank to source, or we wanted all this while, the bank to only source loans from those locations where we have a nearby office, because we want to be in touch with the customer, meet the customer and stuff like that. Now that will not be necessary. Number three, HDFC, all banks are into mortgages, but not every bank has been successful in doing housing loans. HDFC has. We've had a 15% average CAGR growth, or more than 15, I think 16 or 17 odd percent average CAGR growth in retail loans, in retail housing loans. We've managed this growth with total loan losses in the individual book, which have been close to 2 basis points. So total loans written off divided by cumulative loans disbursed, and this, I'm talking of cumulative loans written off in 40 years, has been 0.02% of what we've lent. So time-tested systems. Then you look at our cost structure. We have the lowest operating cost structure that you will see in a retail financial institution at about 8.1%, cost-income ratio. Cost-income ratio of most banks is much, much higher. So in the merged entity, the combined cost-income ratio will come down. Then you look at the benefits of cross-selling. So today, when we look at our customer base, we have nearly 70% of our customers, 70, who do not bank with HDFC Bank. They bank with some other bank. A lot of them have a sense of well-being for HDFC because we've enabled them to buy a house. It is the single largest possession. Generally, most of them have been happy with our service and so on and so forth. So if we go back to these people and say, look, we are one entity, why don't you shift your entire banking relationship to HDFC? I think we will meet with a lot of success.
So your message for the shareholders is like Amir Khan, all is well.
All is well, actually. All is well.
Yeah. Yeah, okay, great. Thank you so much, Mr. Keki Mistry. Thank you.